What's up, everybody? Donald here. In today's episode of Business in the News, we're going to quickly go over the markets and then talk about what's been dominating the business world, which is the fall of Silicon Valley. We're going to dive deep into what it is, how it happened, what will happen thereafter, and with that said, let's get into it. So this is Business in the News, March 13, 2023. So in today's episode, we're going to go over the market and business updates. And I like to look at things like MarketWatch, Yahoo Finance, CNBC to kind of see where things are at with respect to the markets. I look at both the S&P 500 specifically, as well as the Bitcoin as well, the cryptocurrency. And then we're going to go into Silicon Valley. We're going to go over, what it is, what happened, how did this happen, who is impacted, and what will happen from this, right? And what are the repercussions? So let's go into it. So as mentioned, I like to go into things like MarketWatch, Yahoo Finance, and CNBC to kind of see where things are at with respect to the markets. I'd like to generally get a quick snapshot. As an investor, it's really important to know where the markets are at and also how it impacts the overall macroeconomics of business. So with that said, let's go into some of these links here. Check them out. So as you can see, the S&P 500 has taken a dip. There's a lot of forces at play that would impact the S&P 500 index, but it's definitely, we've seen a drop at the closing. With respect to Bitcoin, I did see this in the positive earlier in the day, and so now it's later in the afternoon, so it's the market has definitely fluctuated with respect to the Bitcoin current cryptocurrency markets. As you can see in this particular article, it actually said Bitcoin rallies to 24,000 even as regulators shut down Signature Bank, the CNBC Crypto World had mentioned. And so, as we can see here, it's gone down by by the end of the day here. So in Yahoo Finance, it's obviously Silicon Valley Bank SVB has been dominating the news lately, and so regulators see Signature Bank and a third largest U.S. bank failure. So that's actually, this is the third bank that's been impacted by this. So this is the third bank that's been impacted. So it seems to me that both regulators and banks are trying their best to calm the markets and calm people down from having to do, to pull out all their money, which would result in contagion. With respect to the bank runs, right? That's a quick snapshot of the markets, and now let's get into the Silicon Valley Bank. But now it's actually, it seems to be that we'll need to start talking about the other banks that may be impacted, such as Signature Bank, which, as we just learned. And so, yeah, let's get into it. So as you guys can see, it's definitely dominated the news, kind of worldwide within Google Trends. You can see, the last couple of days is definitely trended up for sure. And so a lot of the news is definitely evolving as we speak. So how did this all happen? I think at the end of the day, it's really important to understand the definition of what led to this. And so in kind of plain terms, it's something called bank run, right? And so what does this mean? So bank run occurs when a large number of customers of a bank or other financial institutions withdraw their deposits simultaneously over concerns of bank solvency. And so when people get spooked by, market news and, the how safe their money is, their capital is within the bank system, they may react, right? And so, when they start to worry, they'll start pulling out the money and, every business, even banks, will require some level of liquidity in order to maintain operations within their company, right? And so that's kind of what happened. And so when you dig deeper into how, like, the timeline, there's a really, really good depiction of how this happened. Visualcapitalist.com did a really great job in terms of showcasing the timeline of the collapse of the Silicon Valley Bank. So SVP collapsed after widespread client withdrawals in what could become the second biggest bank failure in U.S. history. Below is a timeline of the key events. And so let's see here. So I believe that this was just a few days ago. Early in this month, Moody's Investors Service calls SVP and indicates that the ratings firm is preparing to downgrade the bank's credit. So Moody's is among the world's most respected sources of credit ratings. And this kind of led to SVP's team reporting discusses the matter with bankers at Goldman Sachs and fly to NYC, New York, to meet with Moody's and other rating firms. And as this is kind of brewing, Moody's downgrades SVP outlook seems negative. And then, it's mentioned that Peter Thiel, Founders Fund, among others, advised companies to pull money out of SVP. I'm not sure how they got the news, but they got the news. And the media coverage started to really ramp up. And for sure, this is going to take a huge, it's going to impact businesses. And, cash is the lifeblood of any business. And to give you more context, Silicon Valley Bank is a bank that's traditionally used as the banking source for a lot of tech companies, especially in the Silicon Valley area. So as this negative media coverage ramped up, more businesses, I believe, start to pull their amount of money, and what led to a classic bank run, right? And so SVP plunges 60% in after-hours trading. They were at $268, and then they quickly dropped to $172. And then by March 10th, SVP CEO holds a call with venture capital investors, urging them to stay calm. They don't stay calm, as we all know, and SVP shares are halted. On the Friday, Feds went in to kind of halt it to I guess basically to stop the bleeding from happening, right? And so going back to our Silicon Valley Bank, let's kind of take a step back. What it is, right? So Silicon Valley Bank, as mentioned, was a commercial bank headquartered in Santa Clara, California. SVP was the 16th largest bank in the U.S. at the time of its failure on March 10th, and was the largest bank by deposit in Silicon Valley, right? And it was a subsidiary of SVP Financial Group, a bank holding company. As a state-chartered bank, it was regulated by the California Department of Financial Protection and Innovation, DFPI, and was a member of the Federal Reserve System. The bank operated from offices in 13 countries and regions. And on March 10th, 2023, as we all know, it failed after a bank run on its deposits. The DFPI revoked its charter and transferred the business into receivership under the Federal Deposit Insurance Corporation, the FDIC. That's going to be an important piece, as we're going to go into a little bit deeper later on in this video. And it's reported as being the second largest bank failure to, I believe, Washington Mutual a few years back. So this is, obviously taking a huge toll on a lot of, businesses that rely on Silicon Valley Bank to, ensure that they have easy access to the capital, so then they can, pay their staff and payroll and operations costs and all that stuff, right? So why is Silicon Valley a startup haven? As we all know, like a lot of the big tech companies are there: Apple, Google, HP, Intel, Adobe, eBay. They all established, these are all established tech giants in Silicon Valley. So a lot of startups really like being in that hub, as they'll, probably have a lot of resources, networking opportunities with potential investors. So Silicon Valley is definitely a tech hub. And so in the New York Times, Silicon Valley Bank fails after run on deposits. So yeah, a lot of businesses have been kind of in the dark over the weekend. I can just imagine a lot of the founders kind of going through sleepless nights, and so even large tech companies such as Roku has been impacted as well. So in short, the FDIC, as mentioned, it actually protects up to $250,000 that's insured. And so those who have, under $250,000 within SVP should be guaranteed the money back. And so what happens to the people that have greater money than that, right? And so that was up in the air. The last I had read in the news is that they should be covered without, getting into taxpayer money, which is obviously a good thing, right? So it's actually being impacted in other countries. I myself, I'm in Canada, and so it's definitely been taking a toll on Canada as well. So, governments in the U.S., Britain, Canada are taking extraordinary steps at this point to prevent a potential banking crisis after the failure of the California-based Silicon Valley Bank, prompted fears of broader upheaval, right? So it was noted in the Financial Post that Canadian bank stocks tumbled last week and losing nearly $20 billion in market cap after SVP suffered run on deposits and it was taken over by U.S. regulators. Bank shares were down again on Monday with TD Bank falling the furthest off nearly 3% in afternoon trading in Toronto. So this is actually taking a huge, massive, impact on businesses and the financial sector all globally. Silicon Valley's bank's Toronto branch seized by Canada's banking regulator amid collapse. Canadian banks erased $19.7 billion in value on SVB contagion, March 10th, 2023. So this is what I was mentioning. The FDIC insurance, it insures up to a standard of $250,000, right? So I'm going to link all of these news articles in the video description. So if you guys want to dig deeper into these articles, then definitely feel free to do so. So in Canada, it's called CDIC, and it insures eligible deposits separately up to $100,000. So savings and checking accounts, guaranteed investment certificates, GICs, and other term deposits, foreign currency, for example, US, these are covered by insurance. But anything beyond that, I think from a business standpoint, it's super important to, especially if you're the CEO of the company, a big part of your duty is to mitigate risk within the organization and to maximize shareholder value. And so, in my opinion, I think that it'd be a good idea to, to make sure that you don't have all your eggs in one basket, right? So that, in a nutshell, is what Silicon Valley Bank is, what happened, how this happened, who is impacted, what will happen from here. It's still up in the air in terms of like how much more this will ripple down into other banks. It's just a matter of time before we find out, who will be impacted next. The FDIC, CDIC, these are all very important terms to know as business owners. With that said, thank you guys very much for tuning in, and you're up to date in the world of business. Thanks for watching, guys. Take care, everybody. Bye now.